Hello, everybody, and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing very well. Thanks.
We're recording early today. It's noon Eastern on Friday the 13th. Scary, Friday the 13th in October.
That's why we're going early today.
We're going to go hide under the covers in the bed for the rest of the day. No, but seriously, the lot of things we were just talking before we started recording here. A lot of things setting up. We're going to dive right in to Barrie and the big five, which is ES, bonds, gold, crude, copper, the dollar, and the euro. We're going to dive right into that analysis, and then he'll throw it back to me, and I'm going to talk about a bunch of commodities and show you several commodities that we need to focus on. So let's jump right in.
We left last week with what was the number 4370 was sort of the key level we had to hold above.
Mm-hmm.
And as of now, we're actually sort of slipping below.
Yeah.
We really couldn't. We tried, we had like 2 days of, that third day, it was almost like Wednesday was almost like we were able to do that. But then we hit resistance on top. We had done a decent move from low to high. So it was time for resistance. And the idea there is, the resistance there. What we wanted to see was if the market was really, really in a sort of a bullish mode, the consolidation should really hold about 4370, or very, very tight, close to it. Not 60 is a little too far,
Yeah.
And so it was a little bit of mix of things. We had a couple of days in there, and basically yesterday we had sort of an outside reversal because you can see that it was a very long bar, and the day prior was an inside bar, very narrow range, and today we took out yesterday's low. So the setup is weaker, and just like we talked about being below 4370 now, it's clearly on a weaker footing. It really couldn't hold above that. So that's the basics. And I want to switch to the 30-minute chart that we're posting on X Twitter, and just to show sort of what happened. So the resistance we found around 4420, 4416, this band here. Now we post these every day in the morning. You can see we're up 144 was right there around 4380. So and you add 36 to that, we have 180 up. That's what happened. That's why we banged up against this resistance up here. So we're up 180 from the low. So that's normally a good resistance or support, depending on which way we go. So that was a band here. And we were trying to see intraday, at least the basis of the 30-minute chart, we were trying to see if the market could hold above it, especially above this little spike on the 10th. And we couldn't. It looks like we were trying. We were, it really kind of got sort of the bulls convinced in this area. But it couldn't. It just slipped through yesterday, and you saw we came back, and this pullback was a perfect sell because we talk about trend lines and kissing the line from below, and this was perfectly that. You can see this line here. We came back right to it, and then boom, that was a fast move that you would expect from something like that. And it came right at the 180. And after that, you can see the next move up, even though this 43, 70 area has been holding, you can see, we really couldn't hold above it. Now we slipped below that. So this morning we talked about, if we start losing these levels, then, market's just going to be weaker and weaker. And we might have to end up going back to this 43.30 area. Long as we're, it's funny, we have 43.67 and 43.80, and these numbers are coming off the low that we already made. Now that's right in the middle. That's, and our 43.70 level that we were talking about in the daily charts comes right in the middle of that. And you can see what happens in lower time frames when we're trying to establish a level. We're grinding and bumping, and look at all the mess right here, right around 43.70. You see that, right, Ben? It's fairly clear.
Oh, absolutely.
And
it's rotating around it.
Exactly. So that's like, if you look at here, we really can't see the struggle and the mess that these levels create, when the market's, sort of pulsating, pulling and pushing against it. So it's kind of a key level. for now, it looks weak, so we have to call it what it is, and we'd expect lower prices. And like we talked about when these ABCD came in, if that low gets taken out, then it's very, very negative, and we're talking about, kind of a fairly long term. I don't know, another month or two, maybe even a 90-day sort of a correction. And being that August high, we'd at least have 30 days left in this business. You know what I mean?
Yeah.
So I'll take this off for now because we know where that came in. So that's sort of the frame. I think not much more to do for the S&P. If we take out that ABCD that ended here, that zone, we have a 90 up from the high right in that area. So you can think of it like 42.50. And really, if you look to the past here, you can see how, we can look at the triangle here, how this high came in, that high, this high over here, and these lows, and even the little consolidation in the corner. So all of that kind of rests in that zone, in that zone. And everything prior to this didn't have anything to do with this low. So now that we're coming off of that to this 90, right under 42.50 is really the key. Yeah, we can mess around, we can be weak, we can come down here again. But boy, if we take that out, I think we have another, 30 or more days of downside weakness. So that's something to look ahead and sort of understand and get our, get to have a sense of that. Right.
It really boils down to now we got that nice thrust off of the ABCD completion, right? That first thrust. Now it's what happens on this next down move. Do we take out that low, or do we get a higher low that the bulls are going to jump on to say, okay, we're going higher?
Yeah, well, that's the thing. And to get as much clarity as we can with the tools we have, when we look to jump to the weekly, you guys will see why this high was really important and how it's linked to the high, last year. So everything's set up for actually a larger move down, and larger moves down don't normally just go in one day. So we're watching the process to see, are we ending things in here, or are we going for sort of a larger move? And part of that was this 45 by 45. I mean, we were very close, not exactly.
Yeah, it was right there.
Come up to here. It's very close. That could have been a square. We squared out, and we had the ABCD. So that tells us, well, that ended. Okay, that might have been the correction because it would be sort of a textbook. Everybody would see that. So the question now is, we got the first impulse we were looking for, and we called that out, and we had that. So now, okay, so we're having a correction against that low. The question is, are we going to slip right through, or are we going to make a higher low and move? Well, that's we can nail that, and we will on a lower time frames when we get close enough. So that's what we use the 30-minute for, and the 4-hour is to sort of isolate, well, where does it stop exactly? It's a lot easier using the lower time frame tools.
It's interesting too, Barrie, the way you isolated the high, and we have the August high and connecting it to the all-time high. That fits with that bigger term cycle work that I've been doing that shows, in the not too distant future, the next 30 days or so, we should see a sharp leg down to complete this move. This next leg down. It's got, I think I have to go back and check my dates, but I think it's into January where the next low is expected on that, that bigger time frame thing that I've laid out on Twitter a couple times.
Well, if you go with 90 bars, I mean, we get down to December, right? I mean, that's
there you go.
Pretty good. And we can go another 8th out, and that would, certainly maybe another quarter of the square would get us into January. So
yeah, in the first week of January.
But for now, right now, we know it doesn't have the sort of the strength and to continue as a very impulse, like an impulse in the impulse mode.
Right.
So because of that, it looks weak, which means we might come back, and the a higher low might be around 43.25. We'll see. But the key for next week is really this zone, to see if we can hold it in here, which would still make it very positive. I don't, as far as the market goes. I mean, any higher low is positive as
Sure.
far as the market goes, but we want to see, well, how positive, how strong is it? So I think right in here, we'll be able to tell. Above 43.25, I would say it's going to be very strong. And if you scale it from 43.25 to 43.70, the higher this pullback low comes in, the stronger the impulse will be following that. Okay. So we'll watch that. See, already we're at 43.70. So it's really kind of a play going on in here. And you can see how we played with that level before, here, and here. We kind of dipped in it before we left, and here's a little higher low. So it's possible we hold in here. We'll look, but anything under 43.70, we have to consider it to be on the weak side.
You'll love this, Barrie, too. My monthly half square is at 43.61, which we're dancing around right now.
Well, there you go.
Yeah, it's all in there.
Key level all around.
Yeah. Yep.
And Yep. So I'll leave it at that. Let's move on to the weekly. So the weekly, the highs I talked about was this connection here, having 81 weeks, and the fact that we got the low, sort of a 40-week low, which is
right on the half square.
Right on the half square, which is really kind of important cycle. The 41 week cycle is the important one. So we had that come in, that terminated, and you would expect it to go at least down into the, 50% will be a fair pullback. I would say that's 41.60. So figure 41.50, 41.60, and we haven't quite done that yet. On after the first drop, we had an inside bar, one inside bar, and one. So basically 2 bars up is all we had, and which is not very strong. So here, if we're only going to have 1 bar counter trend to the upside basis the weekly chart, and next week we take out this week's low, that's bearish.
Really weak. Yeah.
That's the one you sort of want to sell into. And just so you guys know that. So keep an eye on that. If we take out this low, the probabilities are it's going to get weak in a hurry. So just keep that in mind. And weekly highs and lows really matter, And
yes, they do.
Yep. So all right. So that's all I got for the S&P. We'll let's move on to bonds.
Bonds are very interesting here to me.
Well, the interesting thing is, we had the weekly that we've been watching for a while, and not that I want to open with the weekly, but we did do this ABCD coming into it, and we did hit this
the 144 that you've had that for a long time,
and finally we got there, right? So since we got there, we have to kind of look, and so when I look at the daily now, after seeing what happened in the longer term, well, yeah, sure, we did the one, we did 90 by 135. Okay, fine. That's good enough, that we're in the ballpark. So I would say we squared out. It's time for us to probably have a little bit of a relief counter trend and see what happens from there. Because what happens from there is, if things are really weak, we'll go on up, either in an ABCD or some kind of other move, and roll back down again, and that rollback is going to be the next leg. And these 90s, these square outs, and even the weekly, we saw the 144 target come in. Especially the weekly, we didn't really have a time component. Here we do.
Yeah.
So my guess is we're not done, and this is going to be some kind of a relief, a counter trend, and however that ends.
100% agree.
Yeah.
Yep.
Okay, so that's kind of the deal here. And far as resistance goes, we have this upper channel, and you guys can draw this in. It's very easy to sort of duplicate. And the big level was 19 and a half up above, but this like around 117 is also a very good level, because we have all these old lows there, and we're well below that. So it's really sort of in a weak area, and it's possible that we spend some more time here. But I'm not really thrilled to get short right in here at this point, because we had all these other endings come in.
Right.
So we'll wait on that. But for now, we're basically looking for some kind of a counter trend, especially above the 90, which would be, let's say, 111 and a half or so. And looking at the weekly, I don't have, at least on the square of 172. I don't have, it didn't quite square out, but we can tell. I mean, there's always some square, you know. It's
True.
just, is it sort of a big square or a minor one? But we have been hitting times on the way down. You know, we hit it here, we hit it there. So it's been okay, and price levels have been very good. You can see how this half square caught that first counter trend, and here, you know, after we lost it right in there was that last sell. So I would say it, you know, as long as we're above 144, there's 114 area. I think that's what we left it off last week. In here, it's sort of a, I don't know, we can call it a resting area or something.
You know, Barry, thinking like a criminal on bonds here.
They're all criminals in the bond market.
It's like, in every market. But anyway, I always try and think like, okay, how do they hurt the most people, right? Everybody's been trying to buy the dip in bonds and they've gotten killed. So now people are going to buy the dip and they're going to sucker them in before they pull the plug again. You know, so if the counter if the counter trend dies like at a really good spot, man, the next sell could be tremendous, because you could not only catch people that just dump because they, you know, the bonds are free falling, but the people that got trapped, you know, buying the dip. Because there's so many people been talking about, oh, I got to buy TLT, and this is for months, you know, 3-4 months they've been talking about it. So I think the setup could be there for an explosive move when the next primary trend takes hold.
Well, I think you're right on, and especially if you just look at the technical stuff, bonds hardly put in a low without a false break somewhere, you know, and these lows. So this low, I can't think of it being like the ultimate low or final low to buy. I mean, we don't even have a counter trend. We don't even have a false break in here anywhere. I mean, if we had one, we can say at least we might get some kind of a fast move up that's tradable, trade worthy, right? But here we just have one week and up, and that looks very suspicious. So it's possible we might not have finished in time, but it's possible we go into this half square.
Exactly, rally up into that.
Yeah, we do the 180 weeks and square out again here properly, and then finish it up.
Yeah, I think the odds favor, like you were saying, that you don't want to be short now. The odds favor counter trends are going to hold the day higher, counter trends up, but be wary, and we'll be watching for that, you know, that next sort of fat pitch coming where it fails into resistance in a decent timing spot, and then we can hit it hard again on the short side.
Yeah, I think that one would be a good one, because that's the kind of one where you'd have some panic, especially if retail's buying in here and they're being told, oh, it's a good level to buy. Somebody else, you know, a friend mentioned that the other day, like a week ago, I think, oh, it's time to buy bonds. And I thought, wow, where did they hear it? Well, they heard it on CNBC. And I'm like, well, okay,
there you go.
There's a setup. And we know by looking at this, yeah, it's a decent spot, but I don't think it's the final here before we, you know, market just start rallying from here, which is.
The other thing I pointed out to some people was, remember, we ended a 40-year bull market at those highs in 2020. 40 years. So I think it's going to take a little more than 3 years, you know, to sort of correct those excesses and create the next bull market. But we'll see, right? The market will tell us.
No, it's not gonna. It's 3 years. Are you kidding?
I know, that's what I mean. It's just everybody's ready to jump on it.
Yeah. Well, that's that. You know, a couple of weeks ago we talked about that mentality of when you get conditioned into thinking it's a certain way, even after the cycle ends and the lines break and everything. There's a big lag between realizing, you know, what happened.
Yeah, that the regime has changed.
Exactly. And usually they come around to it when the next low comes, you know.
Right.
You know, then it's time to go, no, it's going lower. Sell it.
Right. That's true. That's so true.
When the retail gets all bearish, that's when the flush comes. And
hey, and I put my hand up when I first started doing this. I was totally caught in that trap. You just
keep normal, right? It's a natural
response. Right. You get conditioned to say, oh no, this is how it is. It hasn't changed.
Yeah, exactly.
And that's rough. That's rough on the wallet.
Well, it's just being, you know, part of being human, right? When we respond to things. And, all right, moving on to crude. Guess what held?
Yep, beautifully.
So we had this block for support, half square off the low. It's a square is 60. That was 30 degrees up. And this 83, between 83 and 81, 82, this 81, 83 was the band. And well, basically we said, even with all the news or whatnot, long as we hold above that, crude's in a good place. It's firm, and consolidating up in here is very bullish. I can't even say enough. Now you could make the case to say, well, we had if that was a high, are we going to do like an ABCD down?
Possible.
Well, yeah, anything's possible. For now, we have to go with what the levels are doing and how strong these levels are. I mean, if you follow this 83 line, which is right here, you can see the highs here, highs there, highs there, right? All that. And
hey, Barrie, you're talking about that ABCD. I was looking at my notes on the 4 hour. We did do an ABCD. You just can't see it on the daily. We actually
coming down right into here.
Yep, we did it. It completed.
I see this. A B C D. Yeah.
Yep, it completed.
And look, it popped up, which is a very positive pop.
Yep.
Gap up on the news, and then we held above it. Okay, fine. So you guys, when we talk about holding above a level, well, here's a really good example. Here's another really good example. This is what we want. And if it holds and you're getting your setups on lower time frames, well, there you go. It sort of makes it easier.
Crude looks good.
Yeah. And the thing we laughed about last week was how, we had 180 weeks low to high, not the ultimate high, but low to high. And
got a reaction.
Certainly got a reaction.
Yeah.
And just ignoring everything else, just looking at the weekly, I would say this inside bar is something we ought to watch for a while, because this other bar was such a big bar. And if we ever take out, for some reason, we take out the low of this bar, I would say then we're going to be very bearish for a while. Yeah.
Yep.
On the other hand, if we take out the high of the week next week, well, it's not as bullish as to the intensity of the bearishness, but it's bullish, right? So
yeah, I mean, look, it's sitting on top of that whole consolidation from late 22, early 23, right in there. Yep.
Yeah. Yep. So, and we got these highs. So the levels are okay. Levels are working out okay. You can even drop a trend line in here. This was sort of a caution, knowing that we were 180 degrees there, and we also account from the June high. So just to keep things in mind, just to make sure. But other than that, yeah. So you guys have the levels for that. Moving on to gold. How
Look
about
at that. Yeah.
I'm laughing because how it always closes at some kind of a line that we have.
At 1940, that's been there forever.
And just so happens to the apex of the triangle,
Yeah.
And very interesting.
Yeah.
And where did it all start? Well, it started with this ABCD completion right there.
I mean, look at that beautiful thing. I was talking with people on X this week saying you can make a fortune just trading completed ABCDs.
You can, and some people do, and they have.
Yeah. I mean, look at the move off of that. It completes and then boom.
Boom, yeah. And all you had to do is catch the reversal. I mean, that's
it.
Basically it.
That outside reversal day was it.
And if we get to the 72, we can see the 1940 lines up with the
perfect
half square there.
Yep.
Well, what more can I say? We're still on a weaker grounds now. That, well, if we wrote that, if you played that, then 1940 is resistance. So you probably want to, take care of your
ring the register a little bit.
Yep, for sure. And the next leg would begin once we can settle above 1940. That's kind of how it goes. But I think it's impressive, man. I don't think I've seen a move going from 1887 to 1940, just like boom, in one day.
Beautiful.
I mean, that's just crazy good.
Yeah.
So that's so we're below 1940. We're still on the weaker side, but we did get this impulse coming off this completion of this ABCD. Right. What happens here? Well, we have to see how we deal with 1940. We might consolidate under it, or we're going to consolidate above it
on top, right?
Yeah, on top, and then we'll have to figure it out from there. There is a lot of overhead on top of 1940. So I'm not seeing like some kind of a crazy move up unless, everything falls apart out in the world. So for
Which
now,
could happen.
oh boy, I tell you, we
Right.
thought, North Koreans dropping missiles in the ocean was a bad time, rough time.
Right.
Jesus, we had no idea how
Right.
bad things can get. So anyway, there we are. That's the thing for gold. Let's take a quick look at weekly. Weekly, well, we did get on top of 1919 basis the weekly chart, which is kind of positive, and the weekly really does kind of drive the gold market. It's very good. We can see the weekly ABCD completion. So logically, it seems like we should have some follow through into 2000. So we'll see. The 1940 we looked at over there was a marker. So if we can get on top of that, we can see there's some more mileage left to the upside. So I would leave it at that. And if we sink below 1919, then, something else is happening and we have to wait, get some clarity. Moving on to copper.
More sideways,
but perfectly in between our two levels, which is beautiful. It's really something amazing to watch. Such a huge market, big contracts. So 354 has been our support line from way back when, and you can see that's still holding. And the other support, resistance now, the old support is 365. And I really can't say much at this point because we're right in between in the zone. and the one thing I can say is it's definitely weak below 365. And of course, there's support at 354. And you can see we haven't really taken that out. And if we really want to do a flush, well, this is where you want to tap it down. And I wouldn't, I wouldn't say it's out of the question, mainly since we couldn't get established above the 50% of the square coming off that impulse. So it's either we're going to consolidate in here on a weaker setting just to see if this 354 sort of gets grounded down, or we're going to take it out and really go for a flush and, put some panic in the copper market. But yeah, it's not positive at this point. We're kind of in, on the other side of the coin, we're kind of watching to see how this support level will hold. But after this many taps, it's suspicious, that we couldn't launch. And so that's
could be a flush and go type thing.
Yep. And the weekly, after we tapped below the line right there back in August, we saw that weakness is going to come in, rallied, came back down, and now it's looking weak, and we had this ABCD drawn out to see if we get down there, and that would be a hell of a flush if we can get down even near that.
Sure.
And still be bullish in the long term because we're really very close to the 90 degrees. So as long as we're kind of hanging out in here, just like, we went down below a little bit, but recovered. So it's really about, can we hold above this in the long run, especially the weekly. So, so far it's okay. Normal correction. Dollar, talking about things hitting levels, very impressive.
Holding support.
And there you go, guys. So when we talk about getting above and holding above, well, here we go. This is it.
Yep.
Textbook, real time. And people are talking about courses. Can you guys, do some videos about how to do? But if you guys watch every week, there's a lot of how to do's in the stuff we talk about.
Absolutely.
And I even told my son, if you really, who's also trading, I said, and he doesn't watch this because it's like, dad's doing it. It's not that.
Right. Dad doesn't know anything.
Dad doesn't know much. But I told him, I said, listen, you should really watch it because we cover a lot of interesting stuff that I probably might not talk to you about.
Right.
So he started watching, and the other day he came up and said, hey, you know what? There's really good stuff in there. So I'm like, yeah, well, I told you. So there's to say, we
don't worry, Barry. The older he gets, the smarter you'll get. Don't worry. It'll happen.
Just the natural way, right?
Right.
The way. Anyway, we're holding above 72. That was the support we were looking at. It was right about 5.5. We said last time it's right there, and we held right there. And now it's really interesting because we did do the ABCD up, and after that you look for some kind of a correction. And I talked about it at the time. Then what you're looking for is, well, how, what's the quality of the correction? Is it a consolidation above? Is it consolidation below? Is it some kind of a fast ABCD impulse down. There's different qualities, and by looking at that, you can sort of read the chart and look at the strengths and of what's happening. And you can see as we came down, you can see how volatility just really dropped right into that. That lowest bar. It was a very narrow day. And you want to watch for that, especially when it happens at key levels, because once the high of that low gets taken out, boom, we had a nice easy trade.
It's true.
So now the question is, what happens? Is this completed, and is this like a lower high and now we sell off? Well, not really, because we're looking at a much larger cycle here. So we don't want to get caught selling every nook and cranny. And that's why we use the squares, because it helps us have a larger frame so we're not caught up in the noise so much. And if you just look at this, we only have, this entire year, practically the entire year, we only mostly worked this one square, right?
True.
And we weren't really concerned with all the nitty gritty unless you're looking at the lower time frame. So here, as long as we're holding above this 5.5, it's in a firm position. I wouldn't say it necessarily strong till we get above 107.25. That's right. That's right there. And if we do that, which means we blow out this ABCD, that means we have another leg up. We have a very good leg up, and
a lot higher to go.
A lot higher, and this 110 area wouldn't be out of the question. So I'd leave it at that. And looking at the weekly dollar, which what happened is we really got above. It looks like it almost came. What's that?
Yeah. It's trying to stay above that half square.
Yeah, and what's interesting is we came down as if we were really going to do a faster move down, but then basically did a U-turn and got on back above the 50% of the square, which is generally, that's the positive thing. So on a weekly basis, weekly takes a little bit slow motion, but once we settle above that, is the 106 area, 5.5, 6, let's say, it's established. It's really in a strong spot. And 112 is
it opens up 112. Yep,
it's not out of the question. And of course, maybe not a straight line, but it definitely opens up the upper part of the square. That's what I want to say. All right, let's move on to the euro. Not much to say. Basically, we did a roughly 90 degrees move from the high to low. So we expect, because of that, and which just so happened, we did 180 up roughly, right? And with the ABCD completion. So at that time, we were expecting some kind of a counter trend. So here's a case where the ABCD wasn't challenged, right? It came down, just couldn't get higher. So that means that leg ended and we started over here. And that's what we were doing. If you guys go back and look at our, late July episodes, we talked about that, how that terminated that leg, especially with the move up and squaring out from different places. So now where we find ourselves is basically we're 90 up from the low, which is a really critical spot. And if you kind of squint your eyes, you can kind of see how once we got above that here, we basically just started making higher lows, going all the way into the termination phase. And now we sold off right into that. You can see we're right there at 90. And trying to struggle to figure out what comes next. And the fact that, it was 270 by 90 right in here, I'm expecting it to consolidate or even do an ABCD up.
Sure.
Do something, but we do have a lot of resistance at 106. Not just because it's a quarter of the square, but also we can see we had price action right at that level. And so I'm looking at sort of a consolidation phase here. And as much as for the dollar till we get out of those, do we get on top of those levels or under those levels? So here, as long as we're above this 104 area, I'm guessing it's going to be a little bit sloppy, and it's probably going to consolidate in here. Now, if we take this out, the 104.40, let's say, then we're entering another terminal phase. We're probably going to go down. Test these lows, which is going to happen. It's just not right now.
Agreed.
So we'll leave it at that. Let's quickly look at the weekly. Well, there's our box.
Sort of same story with the half square.
Same story. So I think it would make sense for it to get down here, 104. Would make sense. I would see that. And again, The same story being if we slip below that, that opens up the lower part of the square,
Exactly.
which is a whole nother deal. But the balance point here is really this 108, and long as we're below that, I don't care what happens in between here, it's on weak footing, no matter what. So that's why I put that in bold. 108 is a thing to watch. And below that, we might bounce off the 50%, but this is definitely resistance. And until we get on top of that, I don't think we can really expect any big upside in the euro. I don't think anybody's imagining that either.
Right.
So that's it. Yeah. So basically,
excellent review. Excellent.
Thanks, Ben. Just to say that we could expect to get to 104, which is support. So 108 on top, and then for support we have this 104 area, and that's really the bracket we're watching on the weekly. Anyway, that's pretty much what I got. I think I covered everything.
Sure.
Good You're covering natural gas today? This week?
Yep, we are covering it this week.
Okay. Because we went up to the quarter square here.
Yep, half square for me, but yep.
Yeah, having a little pullback, which is completely normal.
Yep.
That was well above the 33,000, which is a key level.
Mm-hmm.
And the Hang Seng finally got above the 72-degree level, which is really interesting, is 18,054. And sort of gapping all the way up. We'll see if the excitement can hold,
Yeah, or might be a gap in crap.
Exactly. I mean, it has that kind of a look to it, mainly because they all close lower.
Right.
Anyway, that's all I got. Let me put it back to you. We'll start with NASDAQ, and we'll go from there.
So a lot like you had in the ES, we had an outside reversal bar here yesterday. And then that is leading to the down bar today. The key thing, right, is that we're trapped between the full square here and the half square here, and that's basically defining the action. We dipped below it here, but we tried to clear it, and then we went right back above. So for the bulls to get excited about anything, we got to take out the full square, right? We got to clear this area up here, which is around 15,555 area, 15,560, and the bears, you guys, they need to get under the 14,955.
Right.
What's interesting is look how this harmonic balance point has been sort of
it's acting like a square.
Yeah, it sure is.
Line on the square, yeah.
Right, because here we just came right up to it. We couldn't make it to the full square, but we failed at that harmonic balance point. So, it's kind of no man's land with a bearish lean, I'd say, because of the, sort of lower highs that we've been seeing coming in here.
Yep. And lower lows.
And lower lows too. So not much to add until we make a choice between the half square, the full square here. It's got to pick a side.
Yep.
Anything else you want to add on this one?
Well, just to say that it's weak. It's kind of hanging up in here, but if we drop below 15,000, let's say, I think we can have some trouble.
Yeah.
If we drop below it again this time, no?
Yeah. Take a look at the weekly. We're kind of in a box here.
Yeah.
You have this trend line from the lows that held, but now you have this sort of wedge.
I think we all know it's not going to hold next time. So
No.
I'll put some money on that.
But it's the key thing here is a lot like your weekly on the ES, on the S&P. You had a high, came into the low, you got a lower high, and now we're rolling over.
Right.
So the danger is if we take out these lows, and in this case, if we take out the full square, it opens up basically a retest of these lows. So that's what we're staring at on that front. On the commodity side, on Bitcoin, it continues to just languish, totally asleep, stuck in a quarter square. So I don't even want to waste time putting it up there. So as it moves, we'll update it. But right now, it continues to be stuck in a quarter square, not a half square. It's so tight, it's a quarter of a square. Let's talk about the commodities. interesting moves in the different groups this week. The softs, except for cotton, which continues to go sideways, but in a bullish way, I think, portending a bullish breakout. The sugar and the cocoa short setups, I want to review those with you. One that we got to keep an eye on because it just woke up today in a big way is coffee. I'm not going to show the chart because we're just basically spiking up off a low, so we need to get a higher low, come in, have some sort of setup that we can go against. But we got to really watch coffee because this roughly 4% move today came at a very interesting spot, and it's waking up. Same thing happened in the grains. After the crop report yesterday, the grains took off. Wheat and soybeans are looking interesting in that they're trying to put in a bottom and make a move off of a bottom, but the setup is not there yet. With corn, you can see the difference here, right? In corn, we actually have a low, a first thrust up off, which stopped at a full square, and we have a higher low, and now we have a second thrust up with a triple top here. Barrie, tell me what you think about triple tops and triple bottoms.
Well, they're about to break out.
That's what happens. They generally don't hold. So what we have here is, it's like I'll call it a baby nat gas setup because you only have roughly 3 months since the low. The low was actually 2 months because the low was in August.
Right.
So we're squeezing up against this full square resistance while making a series of higher lows. So the push is going to come. We're going to get through this. As soon as we sit on top of this full square, which is right around, what is it, around 499 area, 499 and a quarter. As soon as we sit up on top of that, this thing will go. So corn should be on your radar watching. This is the kind of setup we like. It's base building with higher lows, right? Series of higher lows, and that curve is starting here. And this full square is showing us where the key spot is.
Right.
Break out there, clear that. It should be good for a run to the half square at least, which is around 551. So it's a nice 50-point move in corn. Anything you want to add here on corn?
Well, that low in August, I think we talked about it last time we looked at corn. That low in August is 90 degrees down from the June high. So for me, it's support. So if we can start giving a sort of a bottoming pattern here, I think it's good. It's good.
Yeah, I think it is, and it's leading the way in the grains. We'll keep an eye on wheat. We'll keep an eye on soybeans and keep you posted as to how those are progressing. Let's go to the next one that we want to review, and that's the short side setup in sugar. Okay, so here's sugar. Last week, let's see, there's Friday, Thursday. We were about here, right? We had made the low and said, okay, that low was an ABC. There was a square, and we had a decent move up. We said, we want to watch and see how it acts, against this half square. Well, we had the reversal. Today, we're having a little bit of a rally, but you can see it's rallying right back up into this cluster of highs. I drew in this bigger ABCD because that's, I think, minimally what we're going to get out of this is, sort of a big ABCD down into around this 2460, 2470 level. So we're watching. I would have preferred to have seen a weekly close below this half square at the 2691 area. It looks like we're probably going to close above it, but we're up against this trend line resistance. We had the reversal after the rally. Now let's see how this thing plays out. The on a weekly basis, support is around 2666, which is again right in this half square area. So as soon as we get that weekly close below, right in this area, that's when I think we'll see fireworks to the downside, and we'll either catch an ABCD or if we're lucky, we catch a big 3, and maybe see it come down into here and into this area to test these lows and those highs there around 22, 2180, 2190 area.
Mm-hmm.
But that's the setup. Wanted to update on that. Anything you have to add on sugar?
Well, I think the other textbook setup is if we take out the low of the 12th, that's the next catching the next leg down, and that should go pretty far.
Yeah, should be a good ride. Should be a good ride. So that's sugar. Yep. The other one that's we've highlighted before that is progressing in its short setup is cocoa. So cocoa, we tracked into this low. First we tracked it into the high. We got the reversal, played it to the downside where it found support here at the half square, and now we're watching this counter trend. Right now we're getting stuck on the harmonic balance point, and just above is the full square on the daily that we would love to sell against if we get up that high. So this is again first thrust. Here comes the pullback, and we're looking for the reversal here to catch the next leg down on cocoa. On a weekly and monthly basis, there is support that we need to see broken, which is right around 3,400. So it's right near these lows, and that's why we got the bounce right in that area right there. So if we lose those, and by proxy then lose this half square, we could get quite a ride because of the structure on the weekly and the monthly with the squares. Anything to add here on cocoa that you see, Barrie?
Well, no, not really. We're pretty much on the counter trend, so we have to all wait and see technically where it ends. And we're right there. We had that other high, so we're close.
Yeah, it's close. It's close for potential fast move there.
And the thing with commodities is you can't just take, one tick above that high. You have to give it a little bit of breathing room. That's technically how it works. So in that case, we really have till the 180 to, that line is really the sort of the make or break line. So it's in that zone. You can draw a little box in there between that high and the 180 line.
Yeah.
As long as we're below that, I would say it's in a weaker leg. So
it's setting up. Next one I wanted to talk about that we covered last week was silver. Barrie covered gold. Gold looks really nice. We briefly mentioned it's a great move off of ABCs. If you could do yourself a favor, watch for ABCs, study them, study the reaction. They are a really great thing to be able to identify in real time in terms of the potential trade setups. So, and silver's no different, right? We had the ABCD down, and now look at the move we're getting going up. The reason I'm interested in this particular area, as we talked about last week, this full square, if you look left, there's been a lot of price action around here, going back to late 2022 over here. A lot of price action around this level. And if we can get up and sit on top of this level, that's going to be really, really bullish for silver. It's kind of like your 1940 level. Actually, this might be more like the 1940 level in gold, where there's just been so much activity there that if we can get above it and sit on top of this, it can give us a really, really nice move higher. We're also coming back and testing the underside of this trend line. So we're really coming into an important spot in silver. But I think based on the ABCD, what we're seeing in gold, and the move that we've gotten out of here, and then today, I mean, it was at first pretty muted. Like gold started moving 2-3 days ago, and this thing caught up in a big way. What are we up today on silver? About 4.3% on the day. And this thing goes when it goes. So I still like the move in silver. Really interested to see if we can settle on top of this 2272 area, because if we do, that's really, really bullish. And that means that, leg ended, and now we're getting a bullish leg to come after it, not some sort of, consolidate. Because if we stay stuck under here, it's going to be more of sort of choppiness under here as opposed to a vertical aggressive type thrust. Anything you got to add here on silver?
No, I think you did good. You covered everything.
Okay. Let's go to the last one. Our friend that Barrie briefly mentioned in his review, nat gas. So what's interesting about nat gas is that, we made it to our first target, which was this half square at 342. And we've been sort of chopping and sort of correcting very modestly off of this big move. Now, how far could we come down and still think it's bullish? I think if we came down maybe to this eighth square, 29, it's basically 299.
Man, that's exactly my level. I have 298.
Yeah, right in here. If we come into this 298, 299 area, and we pull back to that, super bullish, because that means we're sitting on top of this entire 7, 8, 9 months of structure,
right?
And which would be a really good launching pad to get us up above the half square and go up and challenge this full square more around $4. The other thing I looked at is what did we say? Monthly resistance is all the way up at 488. So we have a lot of room to run on the monthly once we clear this half square. Weekly resistance is about 367, which would be right in here. So we're watching the nature of this pullback. So far, it looks pretty good. And as long as we hold above that, we said the 299, 298 level, nat gas is in a really, really strong position to make good moves higher in the next few months. Anything you want to add?
Well, 298, that's the thing I'm watching. Keeping it very simple. Everything else looks good, just like you said.
The interesting thing, and that's it for the charts I'll cover, but the interesting thing that I noticed in my review was a lot of things that were looking for a corner or looking for a catalyst, like the grains, got it. Like the metals, gold and silver, got it. Like the softs, they're getting it. Coffee's making a big move. So I don't know what the confluence of news was, if it was one event or multiple events or ramification of events, but it certainly seemed to ripple through, many different markets. And I think one thing you mentioned, Barrie, that is a decent topic for us to spend a couple minutes on here at the end. When you do get that point or that event that creates news, how do you not sort of like bury your head in the sand about what's going on and be situationally aware while still focusing only on your charts and only on price levels? How do you balance that? Like, how does a trader, what level of detail do they need to know about what's going on in the world and how it affects their trading?
Well, if that's not the question.
But it's timely, and I think it's what a lot of new traders struggle with, right? Because everyone says, "Oh, you got to read the Wall Street Journal, you got to look at this, you got to read Barron's, you got to do this, you got to do that," And a lot of times, all that stuff does is misdirect them.
For sure, yeah.
So how do you balance?
If you're a contrarian, then you can do well with it.
Right. I mean, how do you balance that? You got to know what's going on in the world and going on in the economy with, you can't pay attention to news. You have to pay attention to the levels in the charts.
Man, I've gone through cycles of everything. And where I've ended up is that I think it's not something strategic you can just do by thinking. I think you have to develop it like a habit or a characteristic. And those kind of habits only come from practice. You have to kind of really practice it for it to happen. And this is my take from years of sort of being immersed in this,
Mhm.
it's okay to have some rules and try to mentally be strategic about it. But then when rubber meets the road, all that goes out the window because you're emotional again, and all
Mhm.
these other things get in the way. So what seems to be happening with me is that I don't, there's a certain depth of news that I watch. I don't get into the nitty gritty of everything, that
Mhm.
into the granular level, but I keep an eye on the basics. I might know when the numbers come out. I kind of know the trend of some of the numbers that come out. But I do keep an eye on geopolitics because that's going to play into the future. I think the next 3 to 5 years and maybe even more, I think geopolitics are going to be more of an effect than, let's just say, just US news, what it used to be.
Mhm.
And so because of that, because of the geopolitical nature, I have a sort of a wider scope that I kind of watch things. So the day to day, and if something is developing, happening slowly in some corner of the world, then I can say, well, what affects that? Does it affect crude oil? Does it affect the euro? Does it affect the dollar? How does it affect grains and fertilizer? All these different things. So by watching the geopolitical scene, I feel like I can kind of stay a step ahead of things because I can use that info sort of the background story. But when it comes to trade, I think also, just to make a quick note about, when you mentioned like people that like to read Barron's and Wall Street
Mhm.
and follow CMBs and all of that. I
Right.
think it's okay if you're an investor and you're just putting a couple of trades on a year and you're just looking for a few stocks or some sector to rotate, or some sector that's out of favor, and you're just looking for that, a few opportunities a year. Well, fine, immerse yourself in the news and it's not a problem. I think you can just sort of get in there when you have to. But if you're trading, I don't think that's the healthiest thing unless you have a super, really well integrated mental mindset where you're almost robotic in your behavior.
Mhm.
So there is, of course, it all falls across a bell curve. There are people that can do everything and be okay, and then there are people that slightest bit of emotional news or something that affects them emotionally affects them, and then then there's a majority of we're in the middle of the bell curve. And so coming back to how I look at it is I really lean on the technicals. I lean on the squares. I lean on the levels. I follow the cycles, what expired, what's the next leg, what's the next leg. So basically I'm going from leg to leg on whatever time frame. So, and the reason and how I got to that place is by studying history. If you go back and look, when you're back testing your system by hand or by however you're doing it, you're not really considering the news. You're not really looking at, unless you're testing a news-driven system, which
Mhm.
not everybody's doing that. If it's a technical system, you're not really looking at what numbers came out. FOMC this day, this so and so said this, the other thing. We don't really look at that, and without looking at that, technically everything lines up. So especially if you're using these squares and Gann methods and geometry, what I found by backtesting, I mean, probably thousands of uh, charts by now. What I learned is no matter what the news is, the technical side held up.
Mhm.
Like a level will hold or something will square out and cycle will expire and the other thing will start again. And so through everything, you can take all the crashes and non-crashes and fat thumb moves and all the different things that have happened. Technicals always held up. There was no place I saw in history where I would look at the charts through the square work, through the geometry, and say, "Oh my God, what happened here? It's a blank. It's a void. I can't figure it out."
Mhm.
The news kind of erased everything, all common sense. There's no spot like that. News kind of floats by, and tomorrow's another day, and every rotation, we have a whole nother news cycle. So it seems to me. So I learned by doing backtesting. What I learned was that it doesn't really pay to follow the news and somehow link it to trading. It just doesn't. You can keep an eye out for numbers only because it affects everybody else. And just to kind of feel the sentiment of everybody else. But for you, at least for me, just really leaning on the technicals, meaning the methodologies that we use,
I mean, is it
helped
safe
me
to
stay
say,
sane, through the whole
yeah,
thing. Yeah.
is it safe to say like a lot of the great traders, you don't trade the news, you trade the reaction to the news? In other
Well, I
words,
mean,
you
yeah, sure.
watch the markets and see how do they act at support? How do they act at resistance? How do they act at a full square? And then based on that, that's what sets your trade up, not the fact that GDP was stronger than expected or unemployment was lower than expected or any
Mm-hmm.
of the actual news. It's what does price do in relation to the geometry or in relation to the market, the existing market structure.
Mm-hmm. Mm-hmm. Well, yeah. In fact, that's kind of what happens. What we have to do. It,
Right.
it's well, it's kind of the same thing. Yes. That's,
Yeah. Yeah.
and the reaction. Well, I'm trying to think, because what happened like if you look at how news enters the stream, it sort of cascades. There are people that get it first, then there
Yep.
are people that get it last. So I don't know what that timeline is like. Is it 1 second to
Right. Right.
1 minute? Is it 1 second to 10 minutes? So, and there are traders all along that timeline. And so, however the reaction comes, we know time works in its own cycle, within its own cycle, whatever the dominant cycle is. So if we're squaring out at a low, at the peak of some kind of a sentiment peak, well, it doesn't matter what the news is. We have a square, so we have to deal with it in those terms.
Mm-hmm.
And so that's my thing, is really that. If you're gonna sort of cozy up to news, well, you better know really how it works.
Yeah.
Otherwise, don't cozy up and keep it at the arm's distance and just trade the charts and you'll be fine. But if you're gonna start watching the news or listening to things, first thing is to go back, always study the history to see, well, how did it affect it last time? Did it technically do anything? I mean, technicals always sort of follow. I mean, indicators lag a little bit, but these geometry and numbers and levels are real time. We're actually ahead of time because lines and levels are already there. Time is already there. And as price drops into these points, we know what to expect, what the probabilities are, right? If we have a square, we know the probabilities of, this happening over that, depending on the structure of the market. So once you look at the pattern, the structure of the market, and then you overlay the squares on top of it, and then you understand the price and time levels on that overlay, news doesn't really, to me, it really doesn't make a big effect, other than to know there's news, therefore you can expect a little bit of a heated market or a little bit of volatility or whatever.
Or like we talk about in the ES, under those circumstances, they're going to push it even further on either side of the up or down.
Yeah, exactly.
They use that excess liquidity to either really get in or really get out, and it gives you those wilder swings.
Exactly. So that's exactly it. Yeah. So at least that's happening, right? What's happening now is, there's a reaction to news, and but you watch your chart to see, well, did they push it to a corner that we were watching?
Mm-hmm.
You know what I mean? And then you go forward. So I mean, there's a really cool example on my 30-minute. I didn't have a chance to post it, but if you want to throw me the screen, I can show it really quick.
Yeah, yeah. I mean, one of the things I would tell people that are starting out is don't pay attention to news, just know when the news events are.
Yes. Mm-hmm. That's exactly.
Because I can't tell you how many times when I started out where, some news came out and I thought the reaction should have been quote unquote, should have been the exact opposite.
Mm-hmm.
Like terrible news and something rallies, great news and they kill a stock, and it's like, what the hell's going on?
Yeah.
How do you figure this out?
Right.
And so finally I got to the point where I said, just know when the events are. Don't pay attention to the actual news. Just know when the event is, because you're going to have extra volatility. If you focus on the levels and you focus on the structure, that's all that matters.
Exactly. That's exactly true. And what I wanted to show you was, we were talking about, like a panic sell, so like here is a sell off, right? Yeah, it wasn't on a daily or anything, but just a small example I wanted to show you. So when you look at it, it looks like, well, geez, that kind of stopped in the middle of nowhere, like what happened there. And And of
Go
course,
to another time frame.
well, yeah, well, we could do that. Or what I was going to say was, I mean, we move these squares around because we know where
That's true too. Yeah.
cycles begin and end. Like this one, I've been just for ease of use, so people don't get disoriented. I keep the squares at one point
At the low. Yep.
at the low or high as long as I can. But here, I mean, I saw the move here and move there. You can see that it fits.
New cycle right there.
So if you look at it, we came down 36, right?
Yep.
Bounced off, couldn't get above there, and dropped exactly 72 degrees.
Perfect.
You see that?
Yeah.
So without knowing that 72 was there, a lot of people might be selling here actually at
Right.
support.
Right. Right.
That's how you get caught. Because by this time, more and more people have heard the news, right?
Yep.
And they want to do that. And then, okay, fine. We come up to here. They think, oh, it's safe. It looks like we're breaking to the upside. Well, what do? They come and grabbed all the little stops over here.
Yep.
Flushed it out. And then we took it up again. Now people are really convinced this time we're really going. And what do? They flipped it around and sold off again. Yeah. So just looking at price without having it sounds like we're always sort of, cheering for geometry, but that's what we do. So I don't know what else to say. But if you look at the geometry, where all these points are, and it's not that confusing. And here we see it's a 50% point, 43.43. The market came down into support. Temporary, right? But at least we know that was a leg. So anyway, I just wanted to show you that 72, which was so perfect, and you wouldn't know it if you didn't have the overlay. So,
and that's the key, right? Is the squares give us important reference points where we know that it's a decision point or it's support or it's resistance, and you have to reassess when you get there. You don't just jump in because it's going down or jump in because it's going up. If you're at a point where, it's a coin toss at best, which way it's going to go.
And here's something about geometry, just to throw it in. If you remember this 43.33, we've had it for a while, right? From way back when. So we had that before the high came in. This high came in, right?
Right.
Now, of course, this lower high came in after this, obviously. Now, if you take it from there, 72, it just happens to be right there. So this is why these lines work, because there's sort of a grid, invisible grid that's holding everything together. And if we can sort of halfway use it, even 50% of the value of what it offers, potential, then you're okay. So I just want
that's a great way to refer to it too, is we're sort of making the invisible grid visible by layering these squares over it.
I would agree with that 100%. That's exactly what it is. Otherwise, how else would it work? It's not stopping because we happen to put a square on our chart. I mean,
right. To have such power, right?
Yeah, exactly. So yeah.
It looks like you're doing an ABCD down into that too, huh?
Exactly. ABCD down into the 90. And
right.
So that looks like that might be it for now.
Might be decent Friday. Support.
But it's not what you call a positive close. Let's just say that.
No. And it's still it's only 136. There's still, 2.5 hours to go.
Yeah. And the way it's going, if we somehow slip through here, it could get a little bit nasty. So.
It could be ugly. Yeah.
Nasty already, but nasty.
Yeah. Agreed.
Anyway, that's all I got for that. Was that help? Would that recover?
Absolutely. I think that's a great topic to cover. I think, not only new traders, all traders struggle with that sort of news price action sort of balance that you're looking at. And, I just thought, talking about that, how you handle it, how I handle it might help some people that are trying to figure out what to do with regard to that. Anyway, listen.
A lot of practice is what it is. A lot of practice,
Yeah. Listen, we're at a very interesting part in the markets. We hope the information we're providing you is helpful. If it is, please, like the video, share them, ring the bell, do all sort of stuff and help us grow the channel. Rest up on the weekends, because I don't think it's going to be boring for the rest of the year. I think we're in for some really, really volatile and really good trading environments with a lot of opportunity.
Absolutely.
Have a great week, everybody. Barrie, have a great week. Terrific review, and we'll talk to everyone soon.
All right. Thanks, Ben. Good job. And we'll see everybody next week. Thanks.
Thanks.
Bye. Ciao.
Bye.